Good morning. It's John King with Summit Funding, and today is Monday, June the 9th, and I'm coming to you with your Monday Mortgage Minute. So first of all, an update on interest rates. Last week was not a friendly week to interest rates. It wasn't really all that bad, but rates are a little bit higher than they were a week ago. Still very, very good levels compared to where they had been earlier this year. So if you're looking to purchase or refinance a home, take advantage before interest rates start going back up. As we saw last week, a little bit of increase can happen in a short period of time. Now on to today's product of the week, and I want to talk about renovation financing. So when I talk about renovation, I'm really referring to the ability to pay for repairs to be done on a home that either you're buying or a home that you're looking to buy, that you already own. The bottom line is that a renovation loan gives you the opportunity to finance those repairs into your primary mortgage, and you don't necessarily have to have the equity in the property to finance the cost of those repairs. Here's what it really means as far as your options. Your first option, if you own a home already, is you could look at doing a traditional cash-out refinance. If you have a lot of equity in the home, that's often the smartest way to go, because a cash-out refinance gives you the flexibility of doing the work with whatever contractors you choose without having to go through the validation process that we have, without having to set aside money for contingency reserves. A lot more flexibility if that's a choice for you. For a lot of people, that just isn't an option. As a matter of fact, I have 2 or 3 clients that purchased homes within just the last 12 months that are now coming back to me looking to be able to finance the cost of some repairs for the homes that they've purchased. So we're looking into this renovation program for them, because what it lets you do in the case of somebody who already owns a home, it lets them refinance that home, and they can borrow up to 110% of the value of the home to cover the cost of the repairs plus paying off what they already owe on the property. With rates having dropped quite a bit since where they were within the last 12 months, people who bought within the last year can actually improve their interest rate and get money out for repairs. For someone looking to purchase a home, it's a very similar process. You're borrowing up to 110% of the price of the home. You still have to put a 3.5% down payment because it is an FHA loan. But you're putting 3.5% on the grand total, and that's the total of what you paid to buy the home plus what the cost of repairs is. So for example, if you bought a $200,000 home and you wanted to do $30,000 worth of repairs on that home, then your total acquisition price is $230,000. You're essentially putting 3.5% down on that $230,000. Significantly better than putting the 3.5% down on the $200,000 and then trying to come up with that $30,000 out of your pocket or borrowing from family or any number of different ways in which people do the repairs that they want to do. So we are pretty dialed in on this program. We've got a couple of contractors that we trust explicitly that have done these for us and have the process dialed in on the paperwork that we need. So if you're looking to do a renovation loan, give us a call. We'll get you in contact with a great contractor who can give you a bid and be able to get you successfully through the process of renovation financing. Thanks so much, everybody, and talk to you next week. Bye-bye.